Hey traders, it's Friday and we are onto the final stretch into the weekend. Thanks for joining the video again today. So let's get started. The tape's flashing at us. Gold is standing strong, hence why I've got this article flashed on screen from the start. This week looking at a gain of around 2.2%. Yields are flirting with the breakout, tech's under pressure, and rotations getting real. Today I'll walk through overnight cues, recap how the market's been acting, dig into macro crosswinds, map scepter rotation, and walk you through 3 new trade setups you can fire at the open. So traders, let's lean straight in. On screen I've got the Nasdaq and talking about the overnight and futures read. So futures, our indices, the Nasdaq currently pretty flat at $25,098.18. The Dow down 0.5% to 46,358.42 cents. And the Russell also ever so slightly positive, although more flat at $2,478.06. Then, talking about Asia and Europe, mixed, tech and defensives holding, cyclicals underperforming. Onto the dollar now, showing slight weakness, helping global and commodity names. Gold, as mentioned, holding firm near highs. Hedge flows are very, very real. Currently sitting at $3,986, heading towards the $4,000 mark. Oil commodities weak, no clear trend, energy remains pressured. That gives us an open with room for either breakout or chop depending on early leverage. Alright then traders, let's do our tape recap. Key names in tech and AI were defended on pullbacks. Defensive names, healthcare and staples held up better than energy or materials. Volume in leadership pockets was reasonable, not excessive. And breadth was mixed, strength was not broad. Divergences emerged between strong names and laggards. So our lesson essentially today is that trades must work structurally, not by hope. Alright then, we're heading towards macro themes and crosswinds. Firstly, yield pressure. The 10-year is a decision point. Breakouts equals growth reversal and breaks equals defensive rotation. Then valuation warnings, hence why I have this on screen now from Reuters driving the news this morning. Big financials and global institutions are cautioning about a stretched tech AI valuations, essentially the bubble that we've been speaking about. Gold narrative, 8 weeks of gains tells you many are hedging. Don't ignore it. And finally, dollar dynamics. A soft dollar expands global equity scope and commodity strength. Traders. Alrighty then, rotation and flow landscape. So tech and AI are still the market's core. Its strength or weakness often dictates the map. Premium brands and essentials outperform. Weak names get crushed. Healthcare and defensives, quiet accumulation, safety flows. Cyclicals and industrials, sensitive to macro, one decent data point or yield slip could swing them. Energy and materials are still under pressure until commodity sentiment shifts. And breadth check, if smaller names join early, trend odds rise. If not, expect rotation and choppy zones. So then traders, I've got 3 trade setups going into the open on Friday for us to take a look at. The first is advanced micro devices, ticker symbol AMD. Why? Well, AI and chip demand may reassert in the semi space. AMD often picks up steam if the group re-accelerates. So trade, go long if AMD opens above its pre-market high and holds the first retest above VWAP plus semi ETF strength. Then you are good to go. Alrighty then, our second trade setup going into Friday. We're keeping it simple today, nothing too complicated. Easy entry, easy exit is Costco, ticker symbol COSTY. Well, retail strength and the membership model, less average, more stability. I had a very old draw action on there already. So buy at open if retail ETFs look firm and COST shows early strength. Alright, our last one for today is Freeport-McMoRan, ticker symbol FCX. It's a new one today for us to take a look at. Why? Well, copper and base metals often lead commodity and metal sentiment. FCX gives you leverage to cycles. Trade long if FCX opens strong with commodity sector, either XME or copper EDF confirming. Exit or stop if FCX fails VWAP or commodity weakens. Exit fast. Alright then, our execution and tape signals. First VWAP test equals real bias. Breath by 10 a.m. Wide participation equals winner's day. Narrow equals rotate or chop. Liquidity zones matter, traders. Open highs, lows, pre-market extremes, prior day levels. Volume greater than weak price equals suspect. If volume is greater than a weak price, it's suspect. So trust moves with conviction. Alrighty then, traders, let's wrap it up today. The open will tell the story. Yields, gold, and rotation are the levers. AMD gives you chip momentum. COST gives you stable consumer exposure, and FCX gives you commodity leverage. Trade the structure, respect stops, scale wisely. Let's see who grabs the steering wheel. I'll see you at the bell. All the best, take care now.